That's the big thing we worry about with the United States currency. The tendency of a government to want to debase its currency over time there's no system that beats that, and that's got important consequences, and it's very hard to build checks and balances into the system to keep that from happening. The value of currency is a scary thing, and we don't have any great system for beating that.
What if I told you that the biggest financial threat to your savings is just beginning? Right now, the U.S. government owes $36 trillion, more than the entire American economy produces in a year. That's over $100,000 of debt for every U.S. citizen. And here's what should terrify you. To manage this debt, Washington is quietly doing something that could cut your savings in half over the next decade. Think your retirement fund is safe? That house you're counting on? The college fund you've been building? Warren Buffett warns they're all under attack from a force most Americans don't even see coming. In 2025, inflation headlines have cooled. Politicians are taking victory laps. But Buffett is sounding the alarm. This calm is a trap. Because beneath the surface, the government is still deploying the same weapon that has destroyed middle-class wealth for centuries. They're debasing the dollar. And if you're holding cash, bonds, or a fixed pension, you're the target. History shows what happens next. In the 1970s, this same force wiped out 50% of retirees' purchasing power. A $50,000 nest egg became worth just $25,000 in real buying power. Today's setup, it's even more dangerous. In this video, Buffett exposes the 3 ways Washington weakens your dollar without you noticing, why they can't stop even if they wanted to, and exactly who gets crushed when this accelerates. Stick around till the end, because I'll show you the specific moves that can protect your wealth before the real damage hits.
That's the big thing we worry about with the United States currency. The tendency of a government to want to debase its currency over time there's no system that beats that. You can pick dictators, you can pick representatives, you can do anything. But there will be a push toward weaker currencies.
Buffett isn't talking about stock market crashes or recession headlines. He's warning about something deeper, something slower, a force that erodes your money without you even noticing. Currency debasement. Now, a lot of people hear that and think, isn't that just inflation? Not exactly. Here's the killer difference. Inflation is what you feel, that punch in the gut at the grocery store. Currency debasement, that is the silent thief picking your pocket while you sleep. Inflation is the symptom, debasement is the condition. It's like carbon monoxide buildups for your wealth. Odorless, invisible, and very harmful. By the time you notice, the damage is done. Buffett is saying, look beneath the surface. Just because things look calm doesn't mean they are. So, how does this actually play out? Let me show you something that can make your blood run cold. Economists track something called the money supply. Basically, how many dollars exist that people and businesses can spend. One key measure is called M2. That includes cash, checking accounts, savings, the liquid money sloshing around in the system. Here's where it gets worrying. Since 2008, M2 has tripled, rising from around $7.5 trillion to over $22 trillion. Here is the gut punch. The actual economy only doubled. We created 3 times more dollars, but only 2 times more stuff. That gap, that's your wealth evaporating. And it got even more dramatic in 2020. That year, the U.S. money supply surged more than 25% in just 12 months. It was the fastest expansion of the money supply in modern history. At first, it didn't seem to do much. Prices stayed mostly stable, but within a year, inflation spiked to levels the U.S. hadn't seen in 4 decades. There were other factors too, like supply chain stocks and energy disruptions, but the huge surge in money creation played a major role. And to someone like Buffett, it's a textbook warning sign. When more dollars flood the system without a matching increase in real value, something is going to give. Here's a way to picture it. Imagine you've baked a cake for 8 people. Each slice is a decent size, but then 16 people show up. You don't bake a bigger cake, you just cut smaller slices. Everyone still gets a piece, but each slice is worth less. More slices doesn't mean more cake, and more dollars doesn't mean more value. Picture this. You're at a dinner party, 8 people, 1 pizza. Everyone gets a decent slice. Suddenly, 8 more people walk in. Do you get more pizza? No. You get smaller slices. Same hunger, less food. That's your dollar right now. Same numbers in your account, less pizza on your plate. So here's the trillion-dollar question that should keep you up at night. If this destroys savings, crushes retirees, and breaks trust in the system, why would any government do it? The answer is darker than you think. It turns out this isn't a bug in the system. It's a feature no one wants to admit. And while governments keep playing this dangerous game, smart investors like Buffett have spent decades building frameworks to navigate it. That's why I put together something valuable for you, an investment checklist based on Buffett's principles. It shows exactly what he looks for: businesses with pricing power, competitive moats, and the financial strength to compound through chaos. Get it for free at the link in the description. You will also join thousands of investors getting our weekly Investor Center newsletter, where we decode what legendary investors are actually doing with their money, plus sneak peeks at our premium research service, where our team of pros prepare thoroughly analyzed write-ups on our highest conviction stock opportunities. The link is below. Now let Buffett explain why governments can't help themselves.
I mentioned very briefly in the annual report that the fiscal policy is what scares me in the United States, because it's made the way it is, and all the motivations are to doing a lot of things that can cause trouble with money. But that's not limited to the United States. It's all over the world, and some places it gets out of control regularly. As they devalue at rates that are breathtaking, and that's continued. I mean, and people can study economics and you can have all kinds of arrangements, but in the end, if you've got people that control the currency, you can issue paper money, and you will, or you can engage in clipping currencies like they used to do centuries ago. There will always be people. It's the nature of their job. I'm not singling them out as particularly evil or anything like that, but the natural course of government is to make the currency worth less over time.
Governments don't set out to destroy their currencies, but they always do. Here's why. Politicians have one superpower: spending your money. Roads, healthcare, defense, it all wins votes. But when taxes can't cover the bill, they borrow. Right now, America owes $36 trillion. That's $108,000 for every single American. Newborns, retirees, everyone. In 2000, our debt was 60% of GDP. Today, 135%. And here's the kicker: we're adding another trillion every single year for the next decade. Think of it like a family living large on credit cards. They're not planning to pay it off. They're just hoping they can keep making the minimum payments. But what happens when even the minimum payments start getting too expensive? That's when the central bank steps in. In the US, that is the Federal Reserve. It's like the control tower for the country's money system. It's allowed to create money out of thin air, literally pressing a button and making dollars appear on screen. But it doesn't just create money. It also decides how expensive it is to borrow that money. That's what interest rates are. A higher interest rate means borrowing money costs more. A lower rate means it costs less. So how does the Fed help the government keep borrowing? First, it creates new dollars and uses them to buy U.S. government bonds. Think of bonds like IOUs. The government sells them to raise money, and the Fed buys them with money it just created. This keeps demand for those IOUs high, which keeps their price high, and that means the interest the government has to pay stays low. Second, the Fed also sets the interest rate that affects everything from mortgages to business loans to government debt. For over a decade, it kept those rates near zero. Why? Because if interest rates had gone up, the cost of repaying all that government debt would have exploded. Imagine owing a huge amount on your credit card, and then the interest rate triples. That is the kind of spiral the Fed is trying to avoid. Remember that 25% money supply explosion in 2020? That was the Fed's digital printing press working overtime. Every new dollar making your existing dollars worth less. Here's the dirty secret Buffett sees. Nobody's evil here. They're just weak. Politicians can't say no to voters. Voters can't say no to free stuff. The Fed can't say no to politicians. Raising taxes loses elections. Cutting spending loses elections. But printing money? That's invisible until it isn't. Each new dollar is like adding water to wine. At first, nobody notices. Eventually, you're drinking colored water. And this isn't just America's problem. Japan is doing it, Europe's doing it, the UK is doing it. Every major economy, same playbook. Massive debts, money printing, rates stuck at zero. It's a global race to the bottom, and your savings are the collateral damage. The real danger isn't next month's inflation number. It is the moment people wake up and realize, this paper isn't worth what we pretend it is. When that trust breaks, it breaks fast. And once it's gone, getting it back is nearly impossible.
It's got important consequences, and it's very hard to build checks and balances into the system to keep that from happening. And we've had a lot of fun here in the last, either the first 100 days or the last 100 days, whatever you want to call it, watching what happens when people try to make sure that they aren't running fiscal risks. And that game isn't over, and it never will be over, in finality. If you look up in search the great inflations of post-World War II, it's just a list that goes on forever, and the same names keep popping up and everything. The value of currency is a scary thing, and we don't have any great system for beating that.
When governments create too much money, the value does not vanish overnight. It happens slowly. Like a puncture in your tire, you might drive for miles before you realize you're running on empty. Your savings account still shows the same number, but that number buys less food, less gas, less life. Even if you did everything right, saved diligently, avoided debt, bought bonds, you're still getting robbed in broad daylight. Think of money like ice cream in the sun. Leave it out, it melts. Once it's liquid, you can't scoop it back. That's your dollar right now, melting while politicians tell you everything's fine. Currency debasement starts as a drip, then a stream, then a flood. And once people realize the money's worthless, game over. Buffett knows this because history keeps screaming the same warning. We just refuse to listen. One of the most extreme cases was Weimar Germany in the 1920s. After World War I, Germany owed massive war reparations. Instead of raising taxes, they fired up the printing press. What happened next should terrify every American. In January 1923, $1 US bought 18,000 German marks. By November, 4.2 trillion marks. A loaf of bread that cost 250 marks in January cost 200 billion marks by November. Workers got paid twice a day and sprinted to buy food before prices doubled again. Wheelbarrows of cash for a single egg. Life savings that could have bought a house couldn't buy coffee. The killer stat. By October 1923, 99% of all money in circulation was printed that month. Not that year, that month. What triggered the spiral? A loss of trust. People stopped believing the currency would hold its value. And once that happens, it's almost impossible to recover without a total reset. And how about the US in the 1970s? It wasn't as extreme, but it still hurt. A lot. In 1971, the US cut ties between the dollar and gold. That gave the government more freedom to spend, and inflation started creeping up. Throughout the decade, prices rose faster and faster, from around 3% inflation in the 60s to 12%, even 14% by 1980. Wages couldn't keep up. People felt poorer each year, even if their salaries were rising. Savers got crushed. Bonds were paying 5%, while inflation was 10%. You were losing money just by being prudent. Eventually, the Fed had to slam the brakes, with interest rates close to 20%, to bring inflation back under control. But the damage had already been done. So what's the lesson? Once inflation gets going, whether fast like Germany or slow like the US, it's hard to stop, and regular people pay the price. Who actually benefits when a currency gets debased? The first big group of winners is debtors. If you owe money, inflation is your friend. Why? Because you're paying back that loan with money that's worth less than it was when you borrowed it. Let's say you took out a mortgage 5 years ago. Prices have gone up, wages have gone up, but your monthly payments, they've stayed exactly the same. That's a win. Now imagine you're not just a homeowner, but the US government. You've borrowed $36 trillion. If inflation chips away at the value of each dollar, suddenly that mountain of debt gets a little easier to handle. The next group of winners are people who own real assets. Think houses, land, and stocks. When inflation hits, real assets tend to rise in price. Partly because they're limited, and partly because people want something tangible that holds its value. Take housing. If you own a home with a fixed-rate mortgage, and the value of that home goes up while your mortgage stays the same, that's a double win. Your equity grows, and your debt doesn't. And stocks? They can act like a pressure valve. If a company sells products and prices are rising, they can often charge more. That means higher revenues and potentially higher profits. Not all companies benefit equally, of course, but businesses with pricing power, or exposure to things like energy, materials, or property, those tend to do all right when money starts losing its grip. Now let's talk about the losers. Savers and bondholders get pretty badly hurt. If your money is sitting in a bank account or tied up in low-yield bonds, bad news. Inflation eats away at it, quietly, relentlessly. Let's say inflation is running at 7%, but your bond pays 2%. You might feel like you're earning something, but in reality, you're losing 5% every year in purchasing power. It's a slow leak, but it adds up. And for retirees living on fixed incomes, it's brutal. That pension might look steady on paper, but it buys less every year. Then there's the middle class. Wages do go up, but usually not fast enough to keep up with prices. So every month, your paycheck stretches a little less. You might even get pushed into a higher tax bracket, even though your real income hasn't changed. That's something economists call bracket creep, and it works like a hidden tax. Meanwhile, house prices shoot up, but incomes don't. Groceries feel more expensive. Your savings don't go as far, and you start to feel like the system's working against you. And that frustration, it doesn't just disappear. Historically, it builds. And when enough people feel it at the same time, it can boil over into something bigger. Because currency debasement doesn't just hit your wallet, it shakes confidence in money, in leadership, in the future. Here's the thing. Most people in 2025 feel like we're past the worst. Inflation's cooled off, prices aren't jumping like they were in 2022 and 2023. And so, we stop worrying. But that's exactly why Buffett's warning matters. Because the root causes, they're still there. Trillion-dollar deficits, rising debt, low real interest rates, and a quiet, ongoing trend, letting inflation do the heavy lifting. It's easy to think, things are fine now, why worry? But that's what makes us vulnerable. Buffett's not saying collapse is around the corner. He's saying we're still playing with fire, and if people start losing trust in the dollar, if they believe it's slowly being watered down, that's when things can spiral. And there's no simple fix when that happens.